Commercial real estate mortgages and why it's important for the expansion of your real estate portfolio. That's the topic for today's episode, and without further ado, let's dive in. Hello everyone and welcome back. So today it's going to be all about commercial real estate loans. Why is it important? How does that differ from the typical residential loan? And how you can actually get qualified and get approved for one of those loans. So before we further dive in, I've been getting some calls and some questions, even emails from some of you guys asking me, okay, so what's the difference between a residential loan and a commercial loan? Why should I go with a commercial loan? So at a high level, I actually covered some of that in this video up here. But for those who haven't seen it, basically, when you get a residential loan, that loan goes into your personal credit. So basically, they're going to lend you money based on how much money you made throughout the year. When you're doing a commercial loan, which is for anything that's 4 units and above, you will be qualified based on the income potential of the property. So we're talking about something that has nothing to do with you at this point. I mean, to a certain degree, it still does because they need to put a phase to the loan and someone who's going to be responsible to it. But at this point, how much you make in a year will not be relevant to the application process, to the loan process, because all they care is what the asset has to provide. Does this property has the income potential that it's going to be sufficient to cover the money that we're borrowing the applicant in this case for their real estate endeavors? And if it all makes sense, if the numbers make sense for them, that's when the lender will proceed and issue you the money so you can continue expanding your real estate portfolio. So today we have a guest, and his name is Hector Perez, and he is from Patch of Land. And the reason why I worked with Patch of Land is it's because their funding program is a little different than most traditional lenders. Their product is actually very niche, and I'll let him give you all of the details so you guys can learn more about the entire process of applying for a commercial loan. And without further ado, let's just dive into the call. Okay, so now we have Hector on the phone. Hector, welcome to the channel.
Thank you for having me, Lucy.
Question. We were getting a lot of emails from some of the viewers. They're asking questions regarding lenders. What is it that they need to put together for them? So I thought this was actually a good chance to have a call with you and kind of like go over the requisites. But before we even do that, let's talk a little bit about Patch of Land and your role and what is it that you do that makes you different from all the other lenders out there in the market.
Well, Lucy, I'm a loan officer with Patch of Land. I've been a loan officer with them for several years. So what makes us different from other lenders is that we can close a loan in as little as 7 to 10 business days. We don't require much documentation. We don't require income documentation. We only require a minimum 600 FICO score for the fix and flip product.
Okay. Thanks for sharing. And I believe you mentioned at some point before when we were chatting, you can actually provide funding in as little as 7 to 10 business days?
Correct. So again, once we get a complete package, we can close in as little as 7 to 10 business days. Once you're actually in our system and we do your second transaction with us, we close faster because we have at that point your articles of incorporation, certain documentation. So all we need is just an updated application with the new address, the new numbers, and title and insurance and that type of stuff. Okay,
so thanks for sharing. So now, I noticed in your website that you have a couple of different programs available for investors. Any chance you can just walk us briefly through them? I know you have something for long-term rentals, flipping, and stuff like that.
Correct. We have 2 types of products. Our first product is a 12-month product, which is 12 months, interest only, 0 prepay. So you can get in and out of that product as quick as you'd like. That is strictly for our fix and flip, fix and hold type property. Rehab is allowed on that product. The reason for the short term on that loan is just basically you need quick money to see an opportunity out there. You want to purchase the property, get some rehab money. We finance 100% of the rehab on all our terms, all our loans, so that you can get in there and do what you need to do and then get out of the property via selling the property or refinancing it into a longer term loan, conventional lending. The other program that we have is the rental loan program, which is a 24-month product. That product does not allow any rehab. It's strictly for turnkey properties where you purchase them. There is no rehab to be done. There either is a renter already currently living at the residence or you're going to be getting a renter in that property. That product needs a minimum of 660 on the FICO score. 24 months, the ability to have it for a little bit longer so that you could stabilize the rental income on it so that you can go to conventional financing and longer term loans, because conventional financing, as I understand it, requires at least 6 months with the renters in there to stabilize. So those are the products.
In real estate, relationships are important, but what's more important is efficiency. So Patch of Land is already doing their part by providing funding in approximately 7 to 10 business days. But what can the applicant in this case do on their side to expedite that? Like, do you expect them to handle all the documents in one shot? Like, what is it that an ideal candidate will be like for you to work with?
So on the fix and flip, we'll just stick with that since that's the majority of our business. There's not much that is needed other than application. We do only lend to an LLC or corporation, so the client will have to have an LLC set up. We don't need that to start the process, but we do need it to finish, to cross the finish line. So if they want to be diligent, they want to maybe go apply for an LLC ahead of time, so that way they already have their documents that are going to be needed to be sent in to us. We need the purchase contract fully executed by both the seller and the buyer. So that will happen once they do find the property. If they're going to use a general contractor, they might want to start talking to general contractors to see kind of what their pricing is, because they're going to have to shop that. So I think for them to be more efficient would be to set up their LLC and then find a general contractor that they're going to feel comfortable with. That way when they do find a property, they're always already set up to where that contractor comes out, gives them the bid for what work needs to be done, and go from there. Outside of that, bank statement is something that they can get to us very easily, a driver's license, and then the insurance information for their agent that is needed. And that's pretty much it.
Thank you. This is actually quite helpful, because some of the viewers in the channel, they are getting started in real estate. Some of them have done real estate using the traditional forms of lending, going through the bank and getting the 20% down. So some of them might not be familiar with the whole concept of closing a property on an LLC. So the fact that you're sharing with them that they should do that beforehand to get the process expedited definitely helps them a lot. So now, how do you actually determine if a deal is worth lending money to? Like, do you do some sort of calculation or evaluation on your end, or is it something that the applicant needs to provide?
Well, obviously, Lucy, if the numbers make sense, we'll do the deal. So how it works is we deal with new investors all day long. So if we have a client that has zero investment, they're just starting off getting into the business, then we will lend them 80% of the purchase price day one and finance 100% of the rehab budget. What validates whether we're going to do the deal or not is just establishing customers' investments over the last 3 years. Obviously, it's a new investor, so we've established that already that there's zero. And then the asset itself, we're asset-based. So I will need the property, or at least the zip code at some point, just to confirm that the property is in a dense location. It's not rural, out in the middle of nowhere, in the woods, or next to a power plant, train station, or some sort where it might not sell as quick or have renters wanting to rent that property. That's why we need that. Those are basically the two pieces of information that I need, or we need, in order to be able to confirm whether we're going to proceed with a deal or not. The only two reasons why deals would, not the only two reasons, but two majority reasons why deals would not close with Patch of Land would be that the values don't come in where they say they are. We're going to have to order an appraisal on every property. So if we say that a property, we're going to buy it for $100,000, we're going to put $20,000 of rehab in it, that's $120,000, and the after repair value, once everything is completed, is worth $160,000, but the appraisal comes in as the after repair value only $130,000. The numbers are too close or too tight to make it make sense. What we never want to do is put a client in a position where the profitability is so small that they might get frustrated and walk away from the deal. We're not in the business for closing on deals or what have you. We just want to lend money, get clients in the properties, sell the property, refinance the property, and move on to the next deal.
Right.
So, again, go ahead.
So that way it's a win-win for everybody, I was going to add.
Correct. So we will do our due diligence, or I will do my due diligence to look at the property, the whole situation. That is the reason why I need the application, to get a full picture of what the client is about, what the property is about, and then I can make a determination like, yep, this is a viable loan, let's go forward, or no, it's not, stay away because of these reasons, or we cannot do it because of these reasons. So that the client is not going to lose anything, because they're just giving me information for me to make a decision as to whether we're going to be able to lend or not. And once we make the determination that we are able to lend, then we move forward and go through the process.
Right, and to add to that, so one thing that I've experienced with some of the viewers and even some of the colleagues when they first started on real estate investment is that they were too afraid to kind of like fully share the truth. Like, oh, well, they're going to find out that I don't have any experience and they might not want to lend to me. And I remember telling them, well, if you don't tell them the truth, they're going to find out regardless once they start checking on the stats and the numbers of the properties. So, and then before in the past, I've actually had colleagues when they recently started, and even some people who have reached out to me separately ever since I launched the channel, and they ask, well, if I tell them that I don't have any experience, that the lender might not want to necessarily lend to me, and they might
Correct.
think that I'm a high risk type of applicant and stuff like that. And so the answer I used to tell them was, well, if you don't tell them the truth, they're going to find out regardless once they start running the number. And that's a horrible way to start building a relationship because you're burning it right from the get-go.
Exactly, and that's why I always say, Lucy, honesty is the best policy. Just tell me up front what you're up against, and then so that we know how to work around it. Again, we're going to lend to new investors, so we don't need any experience when it comes to that piece. Now, if we're doing a ground-up construction, which is building a single-family residence from the ground up, then we need experience at that point. So if you tell me you don't have experience, then it's better for me to tell you that I cannot do that deal up front than for us to go down the path, have you spend money, start the process, bring in documentation, to ultimately find out that the experience is not there and the deal dies at that point. So that is the reason it's better before coming, give me all the information that I can better understand what it is we're trying to do and get the loan to go through. The last thing we want to do is waste people's time or people's money.
Right, correct. I read something about pre-funding. I don't know if that's something that we should be covered here. Like, what exactly does pre-funding mean?
Pre-funding just lets the client know that our loans are pre-funded, they're ready to go. That way when we have to close a deal, for example, if we're running to the wire and we're running, you're down to the last day, finally all the documentations we got in that were needed to close the deal finally come in, we're able to just push a button and send the money through the wire through. That's what pre-funding means. I mean that we got to get the documentation, we have to wait, still process it. Sometimes this tends to happen towards the end of the month a lot in our industry. We have loans where we're waiting for just one piece of documentation to just make sure that we're clear to be able to send that money through. And then that piece of documentation comes in on the 9th hour and we get it. Yep, it's good to go. Push the button, send the money through. That's what pre-funding helps us do, is be able to get the money quick to the client when they need it.
If they're planning to do a deal sooner rather than later, they should start providing you with the documents. Just that way you have everything. It's like a pre-qualification process kind of thing. And then at the end, they should just provide you the actual document that really matters, whether it's the contract or whatever is it that you require on your end?
Correct, which we're going to require the basic information up front. So we're not going to be waiting for certain basic stuff up front to fund a loan. What I'm talking about is stuff, clearing the bank statement, making sure there's enough money in there to close, that final things that are needed. Because again, when we start the process, you're just giving me basic information and then we're sorting through it. Our processors will now filter through that information and say, okay, we're missing, these items. So get us these items so that we can go to underwriting. Once the file goes to underwriting, the underwriting processes, they'll scrub all the information and then determine what else is needed in order to close the loan. So a conditions list will come out. Then we go back to the client and say, okay, it's out of underwriting. These are the conditions that we need to be met in order for us to close the loan. That's what I'm talking about, those pieces of information that sometimes they come in the 9th hour and we're trying to close a deal. So once we get all the documents that are needed in order to fund the deal, we're ready to go to fund the loan.
Perfect. Thank you. And you actually answered my question on underwriting before I even get to ask. So just to level set, for those who don't know what underwriting means, it's basically the process where the bank or the lender itself is going through the paperwork, the documentation, just to assess that everything is complete and ready to go for closing. And if something is missing, then that's when you will hear back with additional requests and stuff like that.
Correct. The underwriter's job is to scrub through the documentation. So that is the reason why we want you to be forthcoming up front, to let us know what it is that we're dealing with so we know how to work around it, because we have to present the story to the underwriter and explain to them, look, this is the situation, this is what we're doing, and so we can move forward. Because if the underwriter doesn't know the or what have you. So again, the underwriter is going to do their due diligence and confirm what you have told me. For example, if you have told me I have two investments in the last 2 years, we're going to confirm that you actually have done 2 investments in the last 2 years. If pricing is attached to that information. If pricing isn't attached to that information, then it doesn't matter. So that's the reason why you tell us up front what you're trying to do, what your background, what your history is, and then we decide, okay, here's what's going to best fit you, here's your pricing, get me the documentation, and we go forward. So it's a pretty simple process. A lot of people tend to overthink it and think they need a lot of stuff, but when it comes to investing, because it's asset-based, there's not much. We don't require any income documentation. People are always afraid, I don't make enough money to cover. That's not the point. The point is, if the property makes sense for you to purchase, you have the 20% to put down. You're going to be able to sell it for a profit, then you can get in and use our money to buy that property instead of having to come up with more money. 20% to 15% is the average out there.
Right. And just to clarify for those who don't understand the terminology of asset base, it just simply means that the money that's going to be lent to you will be based on the income of the property versus a traditional mortgage. It's based on how much money you make. So that's
Correct.
where Hector's making that distinction. It doesn't matter how much you make because they're going to be focused on how much money is the property making, how much potential the property has in this case.
Correct.
Great. So, and for everyone looking to make more money to continue to invest in your real estate portfolio, Patch of Land does have a broker and an affiliate program that you can actually join and make money. Is that correct, Hector?
Correct. So the broker program there's certain states, every state is different. Some states you need to be licensed as a broker in order to be able to sign up as a broker. But what you would do is you sign up as a broker with our company, and then you would get clients to try to send you business. The broker program that we have, we actually will set you up with your own landing page, put your logo, your phone number on our marketing material. So it'll have everything that we do, but just have your information on it. We'll set you up with the landing page where that way you can send that information, that marketing material to your clients. They will click on that site, go directly to us, but you will be connected to that client forever. Brokers are able to charge whatever they want on their end, so we make our points, and then the broker will charge their points. As far as the affiliate program goes, that's for someone who just wants to refer somebody, wants to give me a name, give me a phone number, just handshake, introduce us, and then I'll take over that client, try to close that client. If we do close a loan with that client that you introduced us to, you'll make a half a point on the back end, which means once the loan closes, whatever the loan amount that we close on that client, you'll make 0.5% on that. That is the only information that's required for that is for you to sign an agreement, send us a W-9 because the company will 1099 you at the end of the year, which means they're just going to report that they've paid you X amount of dollars for the year for you to report on your taxes.
And this, whoever wants to be part of the affiliate program or become a broker, they don't need a license or any type of LLC or legal entity set up. They can solely do it under their name, correct?
The broker has to be licensed. There's certain states that require licensing. You're familiar with your state. There's certain states that will require licenses. Majority of them do not. So I would say 90% of the states do not require, so you can just sign up on our site. Again, if you go to patchofland/H Perez, you will be able to see the information there and sign up there for the broker program or the affiliate program.
Okay, great. And I think that's basically it for today, right?
Yeah, if you have any questions, you have any concerns, we're more than happy to help, especially new investors who have a lot of questions. I understand it does get a little daunting as far as trying to invest, but the process is not that difficult. I can be reached at area code 424-308-0342. Again, that's 424-308-0342. Give me a call and I'm more than happy to walk clients through the process.
All right, that sounds awesome. So Hector, thanks a lot for joining us today.
You're welcome. Thank you for having me on, Lucy.
All right, thanks. And okay, so that's everything we have for today. So hopefully you found the call to be valuable. And don't forget, the contact information for Hector is down in the description box below. So if you want to get in touch with him, feel free to just hit the link and get in contact with him. He also provided you with his phone number. So feel free to reach out. And as always, if you know someone who's going to find this information shared and this video beneficial, feel free to share the love, share the link to this video so that way they can get informed on what's available out there for real estate investors. And don't forget to hit the like button or hit the subscribe button down below. And without further ado, I'll see you guys next time. Take care. Bye-bye.